up with to resist President Trump's agenda. Don't spend money for a day.
Maria, this is an abject disaster for the Democrats. They've never been in a worse shape, as far as I know, in the history of the country. Rasmussen does daily tracking of right track, wrong track. And last week, it ticked positive for the first time since pre-2008, pre-financial crisis. You look at the Harvard-Harris poll from last week, which regularly understated Trump throughout the last cycle. Okay, he's above 60% on every single one of his major agenda items, which means it's likely higher. When you're getting into this two-thirds, one-third arena for all your major agenda items, this is a freight train that cannot be stopped. Okay, the only source of weakness for the Republicans right now is in Congress and the Senate. They need to stop spending and get on board so we can get inflation under control.
Yeah, for sure. All right. Well, thanks, Cheryl, for that. Let's take on what you just heard from Ryan, but also this. Chinese smartphone maker Honor pledging $10 billion in AI investments over the next 5 years. It will also deepen ties with Google on Android updates and an AI agent as it looks to expand outside of China, Mike.
Yeah, look, the age of AI is here, so this is going to be, $2 billion a year for the next 5 years. Not only are they going to have partnerships with Google and the Android operating system, they're also going to try to put stuff together with Microsoft on your PC. The age of AI is here, and what we've seen over the last few weeks since the middle of February is a little bit of momentum come out of this trade. And so you're seeing a bit of deceleration in growth, particularly in NVIDIA. And so when you're growing at 300% and then 150% and then 70%, simply because the base is higher and it's almost impossible to keep growing at those numbers, it takes a little bit of air out of the stock, and that removes a certain class of investors, namely the momentum investors. And like what we've seen over the last few weeks, again, particularly in the NASDAQ, around the AI complex, is the air come out of this momentum. I would say these are more short-term trading phenomena versus the overall market, some sort of underlying fundamental thing changing. To me, what's really interesting about this $10 billion, all the money being invested in AI around the infrastructure from the Mag 7 names, is that it all comes out of free cash flow. This is all coming out of profits. And so Wall Street loves to see those profits into stock buybacks. That's kind of all we've seen since the zero interest rate era started post-financial crisis. We haven't seen real capital expenditures from a lot of these companies in a very long time. And I think now that this is a turning point where you either need to believe the spreadsheets of Wall Street or the executives in the C-suite of these tech companies and say, when it comes specifically to technology, I'm going to go with the C-suite, right?
Yeah.
Obviously, we had a large faceplant from Facebook in terms of the metaverse, and that has made everyone gun shy. But I think this is different. I think the entire way data is processed is changing in the future. We're in the middle of a technology industrial revolution. This is going to continue for years to come, and this recent sell-off is a great opportunity.
Yeah, I think I agree with you on that longer term, Mike. But what about that recent worry over the Microsoft channel checks? Remember a week ago, TD Cowen wrote about the Microsoft channel checks and came out saying, well, maybe we're not going to see the kind of IT spending into AI that everyone thought we were. Yeah,
that was a few data centers in the middle of America that they thought maybe were going to be allocated towards towards OpenAI. Microsoft could be opening data centers elsewhere or spending the exact same amount of money, but on NVIDIA GPUs or GPUs from Marvel or AMD or someone else. To me, that looked like just an excuse for people who are ready to sell versus a fundamental shift.
Probably, yeah.
And what you're hearing out of these C-suites is that they're throwing out huge numbers of CapEx. They're spending more, not less. So we got a long runway.
You would think so. All right, we will leave it there. Ryan, thanks for joining the conversation today. Good to see you. Really appreciate your time. And we'll see you soon. Revision. So if he just keeps this himself and absorbs these things himself, it's only going to keep the rules and regulations in place, Michael. You know this as an investor. Your thoughts on Powell yet to naming a vice chair of bank supervision?
Yeah, so Powell he likes to put on this persona as if he's this like honest bureaucrat and he's this honest broker. He has been behind the 8 ball since the day he showed up. If you go back to Trump 1.0, was very limited to the nominees he could get congressionally confirmed, and this is the only one still left around. And Powell is very quick to tell you that he does not answer to the president. He believes himself to be a fourth branch of government that is truly independent. It's not in the Constitution, but Jerome Powell believes that he is his own island.
Yeah.
For him not to put someone more friendly on regulation in there makes you wonder, is he really part of moving America forward, or is he part of the quote-unquote resistance? Because moving too slow to raise interest rates led to crippling inflation throughout this, and then now cutting interest rates only to magically change policy shortly after the election. I question everything he does. I question why he's still there.
Yeah.
I think the president can remove him if he wants to. It will take a long, drawn-out fight, and maybe they're waiting to save that for another day.
Well, I'm hearing that Jay Powell is basically making the case to the administration, don't worry about this, I'll handle this, I'll absorb this role, and we also have a committee. That the committee has been in place anyway. So again, it will be status quo if, in fact, we don't see another supervisor for the banks. We're going to keep following.